Hello, guys. Welcome. Let's just give it a few minutes, like always. Welcome to another edition of Charts and Chat. We moved it from from Wednesday to Thursday just for this week. We'll be back to Wednesday next week. I'm glad it went that way. I could have put you on the wrong side of the trade. Well, I was not on the wrong side of the trade today. I was early. I guess. How you been, John D. Rock? Tobias. Long time no see. There's some stuff that it's important to look at today. I'm doing good, Tobias. I'm doing good. We're on the JPM color. When is the quarter in? Oops. I totally forgot about it. Let me see. When is the quarterly expiration? March 31st. We still got a few days. 8 days. But I think it's not important, right? I'll answer your question, Tobias. I'll answer your question. John D. Rock, do you have by any chance the strikes? I don't have it with me. Where did I write this up? I know who has her. Who has them? Let me tag her. Let me see if she's up. She's online. You know what? I sent the message, but let's actually look at the option chain. We can find it. We don't need somebody to tell us. We just go to the quarterly expiration right here. We're just gonna go to the 65 strikes. Now let's go. Let's do more. Give me two. Give me all. Oh, make my computer crash. Let's see. It's probably too small for you guys to see on the screen. I hope it's high definition for you guys. I paid Discord Nitro so everybody can see it. So we look for a strike that has open interest of 40,000 contracts for the quarterly expiration. Right here, this one, 3060. So it's 3060 puts. There's two strikes of puts because they get a put debit spread. Usually it's 44,000 contracts, so maybe they unloaded a position. And I see 40,000 right here in 3630. 3630. So possibly that's the one. I'm gonna see if somebody can confirm it. 3060 and 3630. Puts. Just gonna write it down right here. Alright. Whoops. Didn't mean to blind you right there. For the call side, should be easier because we should be somewhere open interest at 4065. So there's not a lot to do on this one. Yeah, that's the one. So the call size 4065. So So as I guess just for the people that just tuning in, the J.P. Morgan collar, it's a trade that J.P. Morgan puts on every quarter, right? So they have 8 days to the next expiration, and we have our strikes right here. They have a 4065 call, which is right here. And they have a put debit spread. There's 3060 and 3630. So this put debit spread is usually for in case of a market crash. Right? It's some kind of protection. 3630 somewhere around right here. And 3600. No, I'm sorry, 3060, right? So it's like you have to go down all the way over here, right? Right here, right? So in case of in an event of a market crash, they have all this. So how many points is this? Sorry, almost 600 points, 600 points or so, almost 600 points. So yeah, I just gotta subtract that, right? But yeah, in case of a market crash, they basically are insured. All this, right? Boom. And they sell to finance this. They sell the call strike right here. Now we pay attention to this because usually the call strike that they sell, so they're short this call right here. Usually the market ends the quarter below this level. So we have 8 days, and I can tell you that they haven't missed that trade in a long time. I mean, I'm not saying that this is a for sure thing. I'm just saying that when they place this trade, the market tends to be below their strike, right? So it looks like during the last this quarter, the market traded above their strike, and it looked like they were red on that trade, right? And right here they're very green, even though they sold them around this area. They sold this strike. There's a lot of decay happening, right? So in 8 days, if we're not up to this level, this is gonna be zero. So we like to pay attention to this because if we, by any reason, we're like 1 week out and the market is trading somewhere right here, then I'll be betting to the downside, right? Because we're most likely gonna close in 8 days below that. But the case this quarter is that we're below that. It has 8 days, and if you're a credit seller, I mean, if you're a credit seller, you can sell the above it, right? But selling high. We just wanted to know that JP Morgan's collar strike, but we already found it. So basically, I mean, 8 days left. Maybe if we do have like if we're around these levels in next week, then I will say that maybe we can get some trades to the downside. But even if you are here on Friday, above it a tiny bit, that spread, I mean, the credit that they sold is almost worthless. So they still come out as winners, even if we try trade a little bit about. And I can tell you that because I mean, if you look at the let's look at the option right here, real quick. This one right here, the 4065. We're gonna go copy it. We're gonna go paste it. Boom. This is where they got the trade, right? You can see it right here. You see the big volume, right? This is where they placed it. So if you notice that volume price, it's roughly 77.8. If you look at this price right here. So if you might put my mouse right here, it's 77.8. So 78, let's say they sold it at 78. Let's go back down. They sold it at 78. Let's go back down to SPX. Let's go to the option chain. That spread is at $6 right now. I mean, $6. They're very in profit. And as the time goes on, as the next week comes up, this is gonna be expiring more and more worthless, and then we're gonna be looking at the new color, right? So what is 78 to 6 right now? Is a decrease of 92%, roughly, right? So 92%. Yeah, so they're up. I mean, it's not that they're up 92%, but they're up, I guess, 92% of the possible credit received, right? So now they're just gonna shoot for the rest, right? It's good money. Just why close the trade right now, right? If the market was to trade 77 points higher than this, then they lose all of their credit, but they'll still be not at a loss, right? If you consider how much they pay for the debit spread to the downside for protection for a market possible market crash, then I guess they will be down, right? But all in all, it looks like their trade is gonna work perfectly. They always do. They don't control the market, but they're definitely a big force on it, right? So kudos for them. Buklao is saying yes, 39.20 tomorrow. I don't know. We're gonna take a look at a few things that point to the downside and a few things that point to the upside. So let's go down to the technicals and then let's go down to some little fundamentals, right? Let's start off with SPX. I'm showing SPX instead of futures right now because the I just want you to look at certain type of candles that we're having right here, certain formations, right? We had a trend line, we had a break of the trend line. This is on FOMC, so I don't put a lot of weight into it. Like, okay, it broke the trend line. So it really, this trend line is still valid and it has not broken. I will keep it in my charts for future references, but I wouldn't count this as oh, it broke and fell. No, not really. I mean, it was a very emotional trade going that high and then going back down, right? That trade on FOMC, I took some longs into this level. I did not think it was gonna jump another 20 points. I did not think it was gonna jump that 20 more points, but it did and reverse it back down, right? So this is a very interesting candle formation. I think I use the daily 20 to be above or below as a indication if we should be bullish or bearish, but I'll try to stay away a little bit on this past session and the new sessions because I mean we already have a market like this. This was good indication to bet higher, right? Because we were above the 20 for the first time in a while, right? After this consolidation. And it worked for a while, right? And then we lose the 20 and it's time to bet to the downside, but then we regain the 20 right here. So and it loses it. So this was a false indication of upside, and then we can bet to the downside right here, and then we can bet to the downside right here. But right here, betting up, fail, betting down, goes up like this, fail. So I will probably avoid a little bit of the daily 20 on this area. It's getting a little bit this is getting a little bit messy because the longer we trade on this type of box right here, sideways range, you know, the less indication of a trend there is to the upside or to the downside, right? At some point, you are happily betting to the downside, and then a breakout happens, happily bet to the upside, happily bet to the downside, blah, blah, blah. But then once this thing getting sideways like this, you know, it creates this type of situations where you just have a lot of consolidations in between. So it gets trickier, it gets tougher, the market gets hard right now. I think my focus has been doing a lot of what I think it has high probability trades, right? A plus setups, because it's just those B setups, they work sometimes, and when they don't, it's a complete opposite direction. It's just not. It's been rough right now, but there's still good setups out there, you know. So my advice to you guys is to try to be on the best possible trades that you can find, you know, whatever has a lot of confluence and blah blah blah. You should be all the time, right? But when things are hard, that's what she said, you should even more, right? So next up, I'm keeping this trend line right here, which was broken and is still not holding down, so there's not a lot of indication for this thing, right? But Claudio, my stream is kind of potato quality right now. My joke's so bad. Sorry, it's because I watch too much The Office. This is not a comedy show. My stream should be fine, I believe. I got Nitro used for the stream. Nitro, just for the stream quality. I'm sorry if it's not. Yeah, I got scam. It's good on my right. I'm Calv. So some people is good, some people is bad. Probably your end. All right. Next up, so candle formation right here. So as some of you guys know, I follow the three simple steps of this strat, right? So it's three types of candles, which are inside, one that breaks at one extreme, and one that breaks both of the extremes. So right now, the past FOMC candle was a candle that took out two extremes, right? And usually you would like to bet the continuation of the break of that extreme. So this candle broke down like this, and you will like the strategy calls that if this low breaks, because it engulfed all this, right? It engulfed this and plus more, that you should be betting to the downside after this. Now, whether you pick your spots, that's different, right? Because the market did break lower right here, but I mean it also trade very high today, you know. So all in all, I mean this is basically like a doji candle, right? Almost same side wicks, a lot of indecision on the market. The market ended up green today after all this, after the big drop in the middle of the day that looked like the world was ending. The market ended up 0.30% green. Can you believe that? So I construct a lot of this action like when I look at down to the hourly, like this was such a large move right here that the market had to get some digestion, some retracement to go lower later. So I did get short, but at the wrong time. You know, I was looking to short the market somewhere around this area because I thought it was very strong. It ended up going to the 50 and to the 618 and actually going even higher, right? So luckily I did get some shorts around this area because of the 6.165. It went a little bit against me, but I mean this thing came down, you know. So that's what I think it happened, right? So that's my analysis. So a big leg down that has a retracement to go down later. Now we did close at a above the 10% extension, all that. It traded above the 10% extension. So this move is kind of done, right? So what you would like to see if you bet into the downside is that there's some kind of trend continuation down the hourly, something like this, where the market will take some kind of a retracement. I already did a 50%. That was a good short right here to go even lower later, right? So this entry already happened and this entry is already gone. But we it was developing halfback on the day session. A lot of huge range, guys. We'll see. I mean, this should have continuation tomorrow if the market's gonna head lower, right? Based on that, right? Based on the pattern of the hourly candles like this, right? So that's what I mean when you pick your spots, right? Like you did not want to swing short candle like this much, right? Because a little bit upside like this, boom, it sparks a little bit some short covering rally where new sellers will have to pick their spots to take the market lower again, right? I would have wished that the market, I mean, and not the market freaking cares about my wishes, but to me, it would have been better just to drop from the 50% right here and then go down. It's just, I think it was a very, when things retrace too much to the undesirable direction, the probability of continuing lower after a break of that low is super low, right? That's why you would like to see the retracements go only to like the 50%, so the probabilities to stay high, guys. Oh, thank you, Okami, for sharing the YouTube stream. Thank you, thank you. So that's why I don't like the idea that the probabilities of continuation lower have been lower now that the retracement has been all the way to the 6.5, you know, and a little bit past above it, but the candle's closing at least on the hourly into a 618 retracement, you know. So just keep in mind, and you have to treat every trade as a type of what are the odds higher towards to, right? So odds were higher going lower, but for trend continuation, they're not that high, having retraced that much. So that's why I keep a rule. Like once you trade up, start closing about the 6.5, 6.18, that you're probably gonna hit the highs. I mean, the full retracement, right? The whole move. So that's what we have. That's what we have right there. Oops, that's mean to do that. All right, so that's what we have. I think another bearish point that I have is that it closed up below the 20. So I know Don't put a lot of weight into it because we've been going up and down and up and down, but it's below it. Just put it on your notes. It's below the 20. That's it. Don't put a trade decision on it. Just have it known, guys. Um, the so I'm sorry. Next up, I think when I look down to the weekly, which is still developing, guys, still developing. A I think this is a very good setup for shorts. If let's say if we were to finish a candle like this, even if we end up dropping tomorrow and we end up having a candle that goes red right here, right? So like a shooting star right here. You'll be looking at a two up, two down strat reversal. So where next week, once you take the weekly low, we're gonna take it even further down, right? So that's gonna be my main watch. But this candle is still developing. Like if we end up trading higher, closing above the 20, then I'll be I'll be concerned. I'll be thinking that okay, now there's a true break of the trend line. Now this thing is going higher, right? So so we'll see. This thing is still developing, but keep it in mind. Keep it in mind. As of now, I like the shape of it. We'll see what happens. Going back down to the SPX charts on the expected move. This is the expected move for the week. We've been hitting the highs of it, rejected it. We have went a little bit above. Like I said, the market went a little bit too. I mean, it was FOMC. It's understandable. And the lows is the last week open. I mean, of the today's session. So if we are to travel the downward expected move, we could travel all the way over here, guys, which is SPX 3828. All right. If we could if the market decides to, I mean, what is this? How much? If we tomorrow is Friday, that's an 85 points any 85 point drop. The market will have to be very bearish. So keep the expectations moderate. That's possible. An 85% drop, and from the close, it's basically a 120 point drop. It's how do you get the weekly expected move? I have this indicator right here that puts it automatically for me. I love it. It's part from TeoTrade, but you can basically look to the SPX to any option chain, and when you look at the expected move for the week, every option chain has it. You can see how many points is expecting up and down. Let's say for like tomorrow, it's expecting a 44 points up and down. That's for 1 day expiration. Today's is over. I mean, you can see it. All the implied moves has already been priced out. Don't pay attention to it. But whenever you hit Friday at the close, you look at the next Friday and you look at the whole weekly expected move, which you're gonna be looking at. I mean, all of the options have it a plus or minus move. That the options are implying. It doesn't mean that the market will stay inside. Sometimes he'll break it, like this one. It broke it to the downside. This one it broke it, but it stayed inside. It came back later on. This one never broke the expected move. So all in all, like let's just use it as a point of reference. Point of reference. So this market is 1DT options are expecting a 44-point move, but we still have like another 40 something points on the 85 points on the weekly below the prior day lows. I mean, I'm sorry, below the prior weekly close. And from today's close, that will be 120 points, which I think is crazy, right? But, I mean, this market, what do we do right here? How many points was it from here to here? 80 something, right? 85. So, the market's doing crazy things. All right. So, next up, we're going to look at, we're just going to look at this on the ES perspective. It's the same idea, guys. Same idea. I think it's a better look on where we see on the as a trend line. There's a little breach right here, but I'll keep where these two touches go because this one is kind of lined into it. So a break of the trend line, close below the 20, all that will indicate further bearishness for the market if we do end up doing that, right? Key thing will be breaking this low right here. But I'll be watching, if we end up going lower into the session, into this trend line, right? Possible support, possible bounce, or if we break it, we break it. All right. I'm keeping for for further sessions, this level right here, which is 4040, around 4040. All right, because I don't want you guys to take that this is an exact area, and I'll tell you why. Because I had an order to short 4040, and that thing did not fill by one. Well, how many ticks? What, by 2 ticks it did not fill, right? So that's a good lesson for me to learn, that you should not treat levels as in an exact point. Treat them as an area, all the time. Because I mean, just as I was positioned selling to sell 4040, possibly everybody and their mother saw what I saw, so they wanted to short 4040 as well. So they short below, and they got filled, and I didn't. Down she went. So yeah, we're gonna talk about. Actually, that's gonna be my next point, Book Cloud. That's gonna be my next point. Um, Hi, Michael. I see your comment on YouTube. Uh, so what was that at 4040? Well, 4040, if you look at down at the hourly, you can see a lot of the, let's say like yesterday, before FOMC, all of the sellers were positioned right here at 4040, right here. Before this is, ignore these two candles. Before FOMC, every market was just rejecting 4040 heavily. You look, this is on the hourly, on the overnight, right? And if you go down to the, let's say I'm gonna show you the 5 minutes right here before FOMC, right? Kind of, this is where the day starts. Ignore this right here. You'll see this type of rejection right here. It's just getting sold. 4040 is just getting sold. And I know that because I went long at 4040 and it dropped, and it was like, okay, I get out of break even or what? I get out of break even or what? And then I just got out for a small loss, and they ended up dumping, right? So you know that the sellers are positioned right there. And next thing you know, they show up again right here. Probably same people. So it's just been an area that's been very heavy for the market, and I think when this spike above 4040, I think it squeezed a lot of the shorts building into FOMC right here. That I mean, possibly they ended up showing up again. I mean, who knows? I don't have their names, right? So 40, Michael had 40, 39, 50. That's the highs, man. It's just, they now get filled. And actually on overnight as well. On overnight, I was like, okay, the overnight I'm gonna short 4003, 4003. And it stopped at 4001, right? 4001 it stopped, 4125, and I didn't get filled, and this thing dropped. I mean, it's just the way it is, right? So yeah, so same idea as SPX. You can go down to the hourly. Since we had a rejection of the 618, not a perfect one, I gotta say, but there's some right here, 6.5 right here. We know it's been a 6.5, like kind of like a liquidity grab. So we do end up going down. So next up, like if you do want to see the downtrend continue, you would like to see this hourly have some kind of retracements right here, which I already did, and it already rejected. So we'll see. I mean, that short kind of already gone. We'll see what happens. For the upside, I'm not gonna deny the upside. You would like to see this trend line hold for sure. You would like to see this trend line hold, and you would like to see this trend line break, which is, like I said, very subjective. Just keep a very subjective mind on it. Kind of widen the trend line so it looks like it touches everything, right? So it kind of looks like it touches everything, right? You just widen out the width. Trend lines are very subjective all the time. They're not the main part of my trading. All right. Going down to the weekly again. We're still below the weekly 20 right here. The weekly took out the highs, so that is bullish per se, even though things, all in all, from the last week perspective, you're still going higher on lows and higher highs as of now, right? We'll see what tomorrow brings. We're very, very close to what the weekly open, right? So a little bit higher than that. So I mean, things are very massively unchanged. All right. Um, so next up is gonna talk about NDX real quick. NDX is very interesting because it's been super strong. I mean, it does not look anything like the SPY, right? It's still going higher, still breaking higher, it's still holding higher, it's not pulling back at all. So I like you to see that we ended up the day as an inside candle. So it's not a rare thing for the Qs to do this. They do it from time to time. It's not that common either. But I would say that you guys could put an alert at the highs and alert at the lows to see where it breaks to, right? Because it's a doji, so that means undecision, guys. Well, almost about same wicks to the up and down, and ended up closing about the open. So it calls for undecision, and being inside probably range is undecision. So breaks above, go long; breaks below, go short, right? That's the idea. I'm gonna keep my alerts there, to see what happens. Obviously, you can catch stuff intraday, but that will be like the main trade idea right there. Now, I do think the market's a little bit extended from the daily 20, but not that much. It's normal stuff. It's usual business. I would like to point out though that we do have some divergences on RSI. I don't use RSI only for divergences, and they are showing right here, right? So they're showing right here. We're going lower as we're going equal high, not really higher high. You can see it also on the weekly. You can see it also on the weekly right here. A little bit of a hidden divergence, not exactly. No, actually, this one, the weekly doesn't show a divergence. I'm sorry. There's nothing on the weekly for me to see. It's still about the same. Just on the daily right there. That's it for that name. I mean, this one's super strong. I think that's all I can give you for that. I think if you go down to the weekly right here and notice, like, how I use the fibs, right? That I usually take some kind of like, look at that. We're at the 2-year, 3-year anniversary of the COVID, 3-year, right? Of the COVID, that we ended up bouncing at the 618 of the COVID lows. Now I like to take the counter fib for the whole other month to see if those areas are going to be problems in the future. So, all in all, after this leg down, we're rejecting the 32. So to me, that's extremely bearish. If we do end up going to the 50% retracement, I will probably want to take a short right here to go lower. But if, let's say by any chance, the market does end up dumping from here, at 32 retracement from the leg down like this will not stop at a 10% extension. We'll probably head lower all the way to like a 50% extension. So keep that in mind for future. This is a weekly chart. This is gonna take a lot of time, but that's a big if this one doesn't break. If we end up having a weekly candle close above this, then my target will be the 50% retracement off of this move right here, which will put it like a little double top right here, right? So it will be about the same top, and I think if you do this on the Qs, that would align with Andy's what's it called, target to the upside, I believe, right? Let me see. Let me go down to the Qs. Let me go down to my fib. Let me see, 331. I think Andy's upside target is between 334 and 350. So around there, right? So he what I see is that he expects this highs to be hit right here in the future. So that's his analysis, and I think if we do end up having like a weekly candle right here, because you cannot ignore what you see right here, which is basically a very basic bull flag on the Qs, right? That is breaking higher, and if we were to take like a measure move of a bull flag, that you end up going from here to here, and just so you guys can see, let me change to the color of this, right? So if you end up taking this move, so usually people like to anchor it to where the bull flag started breaking higher like this, and that will put you somewhere around this for targets of bull flags, right? So yeah, it's already a bull flag break. It's happening. It's going, and just going higher like this. All right. So that's a perspective of the bull flag. Keep in mind, like I said, there's a little bit of divergence right here, and we have an inside candle. So play the inside candle, and you'll get a little bit of a sense of direction. Okay. Um, Next up, what's up, Chelvac? Sloppy head and shoulders on the SPY daily. I mean, I don't like sloppy head and shoulders. I don't like sloppy head. um, I mean, if anything, it looks like the opposite of the Qs, right? It's making a bear flag right here to a possible breakdown, right? And we're gonna and I'll show you guys why is the market looking like this, right? A little bit like this. Uh, I found this very interesting tweet. This is gonna bring me to my next topic. Actually, no, one more thing, and this is a quick one. Um, let's go down to IWM. All right. So IWM, just quick. We know we are at this bottom of this range right here, and we broke it today. You know, so this bottom of the range was expected to hold, and IWM is just not holding right now. Uh, or if you look at futures, there was already a breach on overnight futures, which I thought it was very bullish that it made a like a little bit of a liquidity grab and then push higher, but now it's back below. So you wouldn't like to see that, you know, you would like to see like this max extreme low and then go higher if you think IWM is gonna start trading on a range, but instead it looks like it's trading sideways to catch up to some EMAs and then eventually break this low that will take you lower to even this lows right here, you know, to prior year low. So watch out for IWM. So that looks very bearish at the moment, you know. We'll see. I mean, we could essentially chop around until this catches up. We'll see a break, or we'll see if we make a leg down. On the same note, Dow futures is still making a bear flag, rejecting the daily 20. So that's holding the 50% retracement right here. Very sloppy, very sloppy. And this is not actually right. This is not anchored right. I'm sorry. Right here. So around the 618 is bouncing, not the 50. I don't know how this was anchored like that. So yeah, it is holding. Those were places for longs for the Dow, but I mean, as you're below the daily 20, I don't like it to the upside until that breaks. So now going down to the strength of the Qs, real quick. You know, a little bit of the strength of the Qs, and I want to show you guys. I wanna show you guys a little bit of this right here that I found very interesting. This is I have not researched it very well yet, but this is a I like this tweet. I find it very interesting. This is the most unstable situation I've ever seen in public equity markets. 7 companies, Apple, Microsoft, Amazon, Google, Tesla, Nvidia, Meta, make up 24.22% of SPX and 51.13% of NDX. That's concentration risk. That's off the charts. So those stocks, guys, as everybody knows, they've been super strong. And I know you guys want me to talk about why Nvidia does not come down. And I think Nvidia is like the number one retail short, not only on LKS, but I mean, I see it on all across the servers that I see. Everybody's trying to short Nvidia. I tried it once, and it's just not coming down. I did actually get some profits off of that short, but it's just not not what I wanted. Right? It's just not holding a trend down. It's still going higher, and that's why this thing is a little bit the SPY is a little bit complicated to trade because these things are very very bullish. The market for some reason is just keeps buying those like if there were some kind of safety assets, right? That's what it looks like. So um it is very risky for the market because if that fails, then the whole charade stops and we actually have a big drop, right? But you cannot ignore that they're strong. So guys, what I can say about you wanting to short Nvidia is that there are better shorts out there. I mean, they're better shorts, and I can just do a quick glance of the sectors right now. Look at XLE below the 20, making a bear flag, filling gaps, going lower. Boom. Look at Jets, right? Well, the bear flag breaking lower. Airlines are looking bad, you know. Utilities. Back to those lows right here. Not holding support. Well, I don't know. This one could hold. Um, it's just breaking that little neckline right here. Bearish, right? Financials. Everybody's betting for an immediate bounce. I don't think so. It's trading sideways. Could trade into where EMAs catch up and then drop lower. Real estate. Very bearish. This thing is probably going to head to the lows again. At least this support. I don't know if exactly a lows, but at least this support. Consumer staples. Sideways to down. Is this a sideways to down? It could hold this as support and then go higher, you know, like a type of inverse head and shoulders, right? But it's not looking so great being below the daily EMAs and the weekly EMAs right here, right? Weekly EMAs rejecting at the highs on everything. So that does not bearish to neutral. Bearish to neutral. Industrials, bearish bear flag, breaking lower. You know, we got this support right here. You know, but not looking very healthy. Not looking very good. There's some industrials that I like to the upside, by the way, but this was not looking very good. Holding the 32 retracement. If this gets lost, then we're heading towards this 50, you know. Healthcare. Bearish. Still trading below the EMAs on the daily. Still bearish. Trying to find a base right here. Materials. Same idea. You see this chart before. Discretionary. It is a little bit bearish, but it could be same case. Could be like a little bit of an inverse head and shoulders right here. If it holds this low, then it goes higher. And you have names right here like Tesla and McDonald's and Amazon and stuff like right here, right? So the market is being bullish on those names, and this could potentially bounce right here and go higher. Communications are strong right now. Technology was basically the cues going higher, and semiconductors, the beast that cannot be shorted, right? So all in all, if you notice, everything is bearish but tech, or big tech, at least big tech. So when that fails, I guess the market can come down. But if it doesn't, I mean, there's better shorts, guys. There's better shorts. Look at what Home Depot is doing right now, right? That was a very good short off the daily 20, breaking that bear flag, going lower, lows as well. Look at that. Look at that daily 20 slip up right here. We shorted XOM today. That was a very, very good trade right here, 300%, by the way. And there's just better shorts. What can I say? There's better shorts than sticking out to see when Nvidia is gonna finally crack down. For the sake of it, we're gonna look at Nvidia and we're gonna see that it's an inside candle. Now, that's, you know what my takeaway is, right? You break the highs, you go higher. Break the lows, you go lower. But not only that, right? But I see this is as bullish. This candle right here is a bullish candle. And why? People be like, are you crazy? That's a shooting star. And at the highs, that's a bearish candle, bro. That's a end of the trend right there. I do get that. It was a bearish candle yesterday. But today, when you have a candle above it like that, it's like this thing didn't materialize, right? This thing was a sell signal to short from year to year. And it just doesn't materialize. We're higher. So it goes to like not that it's a bullish candle, but it becomes a non-bearish candle, right? So it's just a monster that cannot be tamed, I guess. I have no idea how high this is gonna go. You have the year 52-week highs all the way right here. I mean, can you imagine, as crazy as this market is, headlines goes, Nvidia at a new 52-week high, outperforming everything in the market. You know, I can imagine the headline. You know, and sometimes I even trade based on headlines. You know, well, I can imagine what could be so crazy. You know, not that I base big amounts of money on that, right? But I don't rule out the possibility of that happening. You know, there's no indication of this ending. This candle was an indication of the trend ending, but it will have to hold below the candle close, below the candle open, so it stays. So the next candle will stay below it, and then it cracks down, but not like this. And I'll tell you what, people are shorting Nvidia, aiming for this gap, you know, because they think this gap is too much. It's gonna go get filled. It almost filled right here, Gonna fake people out into, oh, it is gonna fill, and the next thing you know, everybody's holding shorts and all this run up, aiming for this. It's still aiming for the same thing. So I do think that when the downside comes, it's gonna be epic, right? It's gonna be epic because you have to take into account that this was the yearly open right here. The yearly open, I'm sorry, it was from here. The yearly open is right here. From year to year, Nvidia's up 82%. That's very unrealistic. How many months do we have? 3 months gone. That's very unrealistic to be up that much on a very large company like that, right? Some AI hype and all that, and from the lows, this thing is up 150%, guys. This is very, very, very unrealistic like that, but it's just craziness in the market that maybe I want to short stuff that it is worth shorting, right? You'll still make money, and that's the goal of it. The goal is not to take Nvidia down. The goal is to make money, guys, right? So we have all this, we have Nvidia like that. We have Apple that is still breaking higher. It reached a 10% extension and stop right here when I get this fib off. And this candle is not inside, slightly down. I will look for, let's see. It's losing steam right here. It's losing steam right here. We see those 2 wicks right here. It's losing a little bit of steam right here. I'll be wary still from immediate time frames fibs, something like this, that it holds, right? So if it drops below, if Apple drops below 156.80 or something like that, I will bet to the downside, on Apple. Diverging a little bit. You notice this heavy divergence from peak to peak. Divergence can play out forever. Microsoft doesn't look great at the highs, but look at this. Doesn't look at this. Isn't this a very bearish shooting star? From a place where it was a good short right here, making a lower high from here, and then the next candle is not bearish. It's still higher. Yeah, it's just those large caps. I don't know, man. They'll have their day, but their day is not soon. Google, not indications of going down. Had a bearish candle yesterday and it's still going higher. So that did not materialize. That's a bullish or a non-bearish signal. Amazon's the one that I will say that the hope for it to go higher will have to be making a base up about the 20 and then punch higher. But honestly, going like this is not so good, guys. It's not so good. Like, it's just failing to continue going higher right here and extend the EMAs going higher instead of sideways, because this is a rejection of the sellers are showing up right here at the 50% right here. Sellers, this is where sellers are showing up. So this one does not look very good, So all in all, I will watch out for the big caps, and there are better shorts out there. Just gotta look for them. And semiconductor sector especially, like I like a lot of names for shorts on it, but whenever Nvidia's up, those names go up even more, even more, right? MU, let's say AMET, they're still trading higher. AMD is gonna be trending higher just like Nvidia is. And that's it. That's the space, man. That's the space that we have. And I mean, I don't know. I'd rather wait for them to show me signs of reversal. I could be late to the party, but I'm definitely not gonna be waiting for it to fall. While holding puts while it's going higher and higher. Remy says Airbnb short. Let me look for Airbnb. I like it. It already played out at two up, two down strike reversal with the targets already met and gap already filled. There was a trade to be made right here, and it's already done. So there was a cool trade at the break of prior day lows today. Once it broke this low right here, guys, it was a straight short right here. It was a straight. This is a sell signal. Once it breaks this low, it's a 2 up, 2 down with a gap to fill. That is already gone. Let's move on. But let's look at this on the daily. So we know that there's a favorite retracement that is gonna go from this last push higher, and those are gonna be your long entries, which one already happened at the lows of the day, and the next one is gonna happen at the lows of the day right here. So I mean at the 618, which is also, you can treat this as an area, right? The 618 with the 65. But I will be like, if I'm short AMV and it does come down, and this is the daily 50 right here, I'll be totally on the driver's seat, not touching my position if I trade right here. If Airbnb trades right here, this is when I go, I'm on the driver's seat. This is gonna go to the lows again, and let's go down. Other than that, you have to be careful with this short because it can place a higher low to go higher. This thing can place a higher low to go higher, and as of now, it's placing a high, a lower high, a low, a lower low, a lower high. So as of now, it's a lower high. So that's good. That's good. So you would like to see your careful short, and once you're below this, you're think that's when you're gonna go uh, get on the driver's seat mode to take this even lower for a lower low, so you continue the downtrend like this. For the higher time frames, when you look at this from the rise that it made, you gotta take a fib from the lows to all the way over here. Take a look at this, right? You bounce it off the 50% right here. So if it does break it, if you're short and does break the 50%, then I will see for a possible all the way to the 618. But that's step by step. You're gonna be just watching out for a possible higher low, so you don't get too happy to the downside until that gets clear. All right. Tobias reminded me with the square one. What was the question? If I think it's gonna fill the gap? Oof, and big oof. So Cathy, what about the dip? There was a support right here. These are the lows, the support, and there's a support right here. You could potentially do it, Tobias, but I mean, what can I tell you? This is as much as I can tell you right here. Go down, put a 4-hour EMA on the daily, and if tomorrow's candle opens below it, as much upside as you would like for it to go all the way to the gap fill, I will probably only target a tag of this EMA. And this EMA is not that it's such important, the 4 EMA. It's just that the only mega extension from that is such a small time frame. I will take the 4 EMA. But remember, right? Tomorrow's candle is gonna bring this EMA down and the average, and you have to assess if you still have upside to go into that 4. Past that, man, it's super hard because this is more of an emotional trade or more of a momentum trade than technicals. I mean, the chart got broken when this news came out. It's a news trade, so the chart is broken. The chart will have to develop longer. Think of it like earnings, right? Post earnings, you have to see the chart develop longer so you can get some hindsight of where could it go. Right now, there's nothing to go like, okay, it's gonna go higher, it's gonna go lower. There's nothing to it. Just that there's some extensions to it, and you could potentially play some sympathy plays instead of a square, right? Like we're going for PayPal. PayPal is a big sympathy play that is looking around the lows. That's possibly a dip buy if you believe the support is gonna hold. If you think it's a bear flag, it's breaking lower, then it's a short. I find it very interesting that it filled the gap. This one filled the gap. This is where you could pull a trade or fill the gap. You see that square and PayPal were down. You want to long some of this. PayPal doesn't have the news, so just go get the gap fill and GTFO from the longs, right? Or wait for the gap fill and then short. Either or, it still works. But Square is a news trade, and it needs the chart to develop a little longer for you to have some kind of edge on the technical analysis. I know you wanted to tap. I know we're wired to think that okay, it's down, so it has a gap and it must fill. But I can present you. I can present you with hundreds of charts that has gaps and they just leave them behind to the upside and to the downside. You don't get gaps, Jerry. Jerry, gaps are this. You see the daily lows? You see the daily highs? This is a gap. That's it. That is it. You see them, but they confuse you. Look, it's because you have to remember that gaps don't stay on fill for too long, but they also don't fill on the first same day. Sometimes, sometimes they do. PayPal fill its gap on the first day. Um, but I'll give you an example. You saw me trade. I'll give you an example of XOM today. XOM has a gap right here, right? From here to here. One day, XOM decided to open higher and go even higher and left a little hole right here behind it. Then XOM trades into a daily 20 and rejects. XOM trades into a daily 20 and rejects. So I'm like, this thing is in a downtrend, And what's the target for a downtrend? At least the gap fill, right? So this is when I go short, looking at the chart. This is where we go short, looking for the break of this low right here. Once that breaks, this is downtown right here. Let's go short down. I'm sorry, into the possible gap fill, which is this high right here, and that is all. That was a trade. That was a trade right there, guys. That was a trade. Can it go further down? I don't know. Can it go up from here? I don't know. That was a trade. You identify it's below the EMAs. It's a downtrend. There's a gap below it gaps do not stay on fill for so long. There was a gap right here. Look at this. There was a gap right here. And then you wake up one day thinking XOM is so low and it left a gap. Can it go up? I'm going to bet that it does. You get into some weeklies and then boom, decay, and it finally does fill a gap. But you just have to pick your time, Okay, there's a gap right here. Okay, we do have a signs of reversal. This is an inside candle, breaks to the upside. Bet up, right? Take some calls. Boom, goes. You aim for the gap fill, goes even more to a daily 20. You got your trade. Now right here was the other way, right? But it's just the idea that gaps are gonna fill right away. No, I mean they'll have some days like this. They'll probably fill it. I'm gonna give you a gap that has everybody grabbed by the balls right now. This one, right here. This gap right here has got everybody by the balls right here. This one right here. It's because AI, so Nvidia shouldn't be up that much. I agree on all that. And then you start going a little bit inside the gap and like, holy shit, we're getting the gap. Nope. Goes up. It goes a little bit inside. Oh, we're getting the gap. Nope. So be careful with those gaps. The inside candle, I mean, the whole strat and the inside candle things is that psychologically, one side of the trade will be dominating if it takes out the extreme, right? That's the whole idea of it, right? And they work great sometimes. Look at this inside candle on Nvidia. It breaks lower, boom, you bet down, right? So we have some inside candles. We have one on QQQ, and that's where my main focus gonna be at. Okay. I do think that the market is held by a very, very small percentage of stocks. You can see on a large evidence, like this right here. I'll give you a sign right here. This is where a market ended up higher. If you had seen a chart of the market right here, let me see. Let me show you right here. Right, it's this day right here. Look at this action, right? It goes. The stocks are going the same. Boom, 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 boom. And instead of the stocks joining the upside, the market squeezes itself up. Only tech starts running, and tech goes crazy to the upside, and the market is left behind. So, the rest of the market is not participating. Maybe the bullish scenario would be that the large caps do take a breather, and everybody else starts going higher. That would be the bullish scenario. As of now, bread sucks. Look, watch this. Watch the bubbles of today. 1.81 to 1 negative ratio on the NYSE and a 1.26 to 1 positive ratio on the NASDAQ. Usually those are either both green or both red. So right now is large caps, tech is going higher. XOM was money. Yeah. Just seeing that comment on YouTube. Uh, so that is all. I spent the whole hour talking, no breaks. We didn't get to do a lot of suggestions, but I did take some of you guys' suggestions, and I think I left you with some good information. I hope I did. Any questions before I leave? Thank you, Jerry. Thank you, Kyokami. Thank you, Buklao. Thank you, Tobias. Buklao and Tobias, one day I'm going to see you guys in the VIP room. Tobias just left. Hopefully, let's kill it. We've been killing it. What are we DGNing tomorrow? Join the VIP, my friend. We're killing it in the VIP, right? I was catching some fire at the open, but we killed it. You gotta learn a thing or two, I think. It's hard to trade the open. Yes, it's hard, but I'm here to teach you how to trade the open. The open is becoming my jam. I'm 10. I don't want to be sounding like the very the very classic day trader that I trade the open and then I'm free the rest of the day and then I go to the beach. No, I do trade the open and I make my money on the open, but my dumbass sits in the fucking computer all day. Not all day. I'm sorry, the whole session. Still giving money back. No, not giving money back, but try to make a little more money. Um, I do decently. I do decently. That's all I can say. I mean, it takes a lot of work, guys. Trading takes a lot of work. It's Thank you, Michael, for that. I hope that XOM gains can bring you to the VIP, Michael. I'm just kidding with you. I'm just kidding. Um, but yeah, what's it called? I own shoes, but I don't wear them. Nah, I do wear shoes. I'm like, you guys ever seen Death Note? I I tend to sit like freaking L from Death Note, just training on the computer with my knees up. Yeah, yeah, kind of training like that and eating like that on my desk. How do I get into trading, Jerry? Um, when I was a blue collar worker, I spent a lot of the time just saving money, and I had no idea about investing or businesses or anything like that. Right? Like I knew, I mean, there's businesses, but I knew that the stock market existed. I knew that crypto existed, but I never ever looked at even the prices, the charts, anything like that. I was very unaware. Um, I knew. I mean, I would check that. I was working for a company that was public and then became a penny stock and later on they listed. So um, I got laid off because some guy broke his skull on an accident, and there was I didn't get out. I was demoted, and I that's when I say I quit. And I wasn't gonna take a fault for a guy. I was his supervisor, but I wasn't gonna take the fault for the guy breaking it, not wearing his hard hat. When I can't even turn around 5 seconds when somebody just takes a hard hat off and gets stuck on the head. That person did not die. Yeah, I did work in the oil field. So uh, so yeah, I mean, the I started just taking some time off from work, and then I started diving into the idea of investing. That was back in 2018, 19, yeah, 2018, somewhere like that. And then some guy I got scammed by this guy, by the way. They gave me a business proposal for doing some online shipping on Amazon and this and that, and then to invest in Bitcoin with him. So I did give him some money on Bitcoin, and then I started researching about it. Right, like okay, I gave him some money for Bitcoin. I don't know how this shit works, right? But so he kept that money, and I know. I mean, after doing research and learning about it, you understand like you don't need anybody to invest a bit for to Bitcoin for you. You know, you just buy the Bitcoin yourself. Go buy it and open an account and buy it yourself. But when you don't know, you just don't know, right? And that thing sparked uh, an interest on me of okay, so you can open accounts to buy crypto, you can open accounts to buy stocks, and then options came on, and then spreads, and then day trading, you know. So it was like a snowball effect, and I liked it. I was hooked. I mean, I did not finish college, guys. I was being a guy that uh, gets all of the answers right on the test, but never does any amount of work. So you tend to fail for not doing any work, and so I don't know. I kind of have like a keen of understanding things, like some kind of ability to understand things. So I just go and I do a ton of trial and error. Back in the oil field, I was a supervisor. Like I said, that's a position that takes a shitload of years to be at, to be. In charge of $1 million operations and stuff like that with machinery and people and all that. Uh, so yeah, that's the story. Yeah, I got it snowball into trading it just because I get hooked and I don't know. I started learning and learning and learning. I like the freedom of all this stuff. You know, I like it. And I started liking this Discord thing because it my I have a I my head is running like crazy all the time. It's just I don't know. I'm just keep thinking and then music and keep thinking and then music and it's just constantly. So whenever I'm doing this type of charts and chat and doing or being on Discord chatting with other people and being on other groups and all that, I can just put my mind to work and where I can express what I'm seeing and putting it on charts, putting it on trades and everything. You know. The trading, Remy, trading is just blood in or blood out. You know what the saying is, right? So you give your blood to get in, and you can only give your blood to get out. That's so thank you guys. Yeah, I'm gonna sign off, but yeah. So either we make ourselves mega millionaires, or we're gonna go behind the dumpster on the Wendy's, guys. Love you guys. Laters. It's uploaded. Just go there to the YouTube one. Thank you guys.